mentioned the differences between New York and New Jersey, and I got to tell you that you got to follow the transit lines because what happened in New York followed the transit down into New Jersey, and we have been really overwhelmed, as you described here in New Jersey, particularly in northern New Jersey. So today at our command center call, we had 544 patients with COVID in our hospitals, and about 35% of those patients are still on ventilators. So we have a very sick patient population, but that's down from our peak, which was on April 9th, where we actually had 834 patients. So we're down about 35%, but it's still an enormous number of patients.
You know, as we've gone through this process, Brian, I mean, what have we learned about being prepared next time, you know, and what we need to do in terms of really shoring up our health system and access for everyone?
You know, there's a famous statement, it's about the economy. Well, it's about the testing. I mean, our major lesson here is testing was a problem at the beginning. Testing continues to be a problem today. And if we don't get this testing right as we go into recovery, we're going to have a rebound effect, and we're going to be back in the soup again. And we have to be very, very careful about that. The second thing that we've learned is that just-in-time delivery doesn't work in a pandemic, and our supply chain is really broken right now. We went through periods of enormous panic, making sure that we had the right kind of protective equipment for our team members to keep them healthy and safe. Ventilators were a big issue over a period of time. I can tell you just a weekend we spent scanning the nation for ventilators and being able to have many of our colleagues in different parts of the country support those. And it's the same thing with medications, particularly those medications that support people on ventilators. So what we've learned is we've really got to fix this supply chain. We've got to have more control over it because, you know, COVID is not going to go away until we have a vaccine. And that could be a year and a half or 2 years away. So we have just threaded the needle here in New Jersey. The governor has been a fantastic ally and advocate for us, particularly with the federal government and the stockpiles. But we've learned a lot, and we got to make sure that we continue to use the tools that we have, the predominant one being social distancing right now.
So, Brian, I want to talk a little bit more about testing if we could, because I feel like we want to go a level down and understand both testing for the disease and also the serological, the antibody testing. What do we know now, and what is important for our listeners to know in terms of what they should be doing, what they should expect, especially, you know, in and around your hospital system over the coming weeks?
So the frustration that we've had with the diagnostic test, in other words, do you have COVID or not, is we needed to get that right at the point of care so there wouldn't be delays in providing a definitive diagnosis. Because many patients come into the healthcare system and they don't need to be hospitalized, about 80%. The 20%, so when they go back, they need to know if they have a diagnosis or not, so they know whether to self-quarantine. That diagnosis wasn't coming back for 3 or 4 days, and that was a big problem. The 20% of the patients that go into the hospital, we have to treat everybody is COVID positive until we have a definitive diagnosis. And in that instance, about 45% of the patients that would go into the hospital and be tested would be under, we wouldn't have a test result on them. So we were burning through all that scarce protective equipment because we had to treat everybody the same. So again, we have to have a point of care test on that. And then going forward, as we open up healthcare and start doing some of the care that's been pent up, and you've seen articles written recently about that, where people are just staying home instead of engaging in the health system, which they need to do, we're going to need to provide that test at that preoperative time or pre-procedure time in order to make sure that we know those patients do not have COVID. So the diagnostic tests are going to have to be at the spot you're doing the care, and they need to be able to be determined right away.
And when you say point of care, I just want to make sure that I understand. When you say point of care, that could also include a pharmacy or someplace like that, right? Or am I misunderstanding?
Well, if you're coming in for a diagnostic test or if you're coming in for a surgery, it would be in a facility like that where you do your preoperative testing. The second piece that you talked about, antibody testing, that's going to be important as it provides some clarification on whether or not you have had the disease previously. Now, over the last week, you've seen two things happen in that space which are concerning. One is that we are getting an incredible variation of results on the different tests that are being done, the types of tests that are being done. And it's really caused some pause and some concern, but clearly we've got to run that down, because what we don't want to do is give somebody an impression that they have built up the immunities. And then the second piece that's been of concern was the feedback we got from the World Health Organization over the weekend that perhaps having those antibodies does not necessarily protect you again from getting this virus. I think more work needs to be done in that space, because the consequence of thinking you're bulletproof on this and you're not going to get it again is a problem.
So, okay, I don't want to get all dystopian on everybody, but Brian, describe to me then what our world is like going forward. Is it we all just have to get used to a lot more testing, wearing masks, and potentially, I mean, you oversee a massive hospital system, 7 hospitals in New Jersey, I think roughly 17,000 members, almost 5,000 physicians, 11 counties, 5 million people, have access to your system. Is it a case that, how we go about getting procedures, it's going to be very different, and we have to just get used to it. That's going to become the new norm. And we also will have health facilities that are separated into virus, where people have the virus, and those places that do not.
Yeah. The first thing I want to say is that our hospitals are safe. I would argue our hospitals are very safe compared to some of the other things we engage in our communities as we seek our activities of daily living. So we're safe to begin with. But as we think about needing to continue to care for this virus, we will, as our volumes go down in our hospitals, these patients will be contained in very specific areas where they won't be interacting with other patients. The team members that will care for them will care for those patients and not care for other patients during their shifts. And we need to make sure that we have safe pathways through our organizations so that we don't have people intersecting inadvertently. And all those steps are being put in place literally as we speak. We also have, when we do turn a unit over and have it become a non-COVID unit, we do a terminal cleaning in there and make sure that everything is safe. So patients shouldn't be safe or shouldn't be scared in there or safe. The thing that we need to think about, though, to your question, is this will be a period of wearing masks. This will be a period of maintaining social distance. This will be a period where you can't bring your entire family in on your office visit. Those are the kinds of things that we're doing. We're going to continue to really use telehealth in a big way, but we're also in the process of opening our offices. You mentioned we have a lot of physician practices, and we're doing that also.
And so I guess just to drill down at a further level, how long does the sort of era of social distance and masking and all of that last in your estimation, Brian? Is it till we have a vaccine, or what do we need to see in order for life to even optically look something like close to normal?
Yeah. In a perfect world, that's the answer. It's a vaccine. But the reality is that that's going to take a while. So we've got to continue to pursue a couple of things. One is we've got to pursue effective treatments for this disease, because that will go a long way in itself to taking the scare out of this. The second thing that we've got to work on is just continuing to educate the public about the importance of washing your hands and using a lot of common sense, the kinds of things that you learned when you were a kid, and make sure that we're adhering to those things. But we also are going to be in a position where our lives are going to be a lot different. I think about restaurants, paper disposable menus. Instead of something that seats 100, it'll seat 50. And those all have huge impacts on those various industries. But we will be in a different place. But the key thing, again, just to go back to it, is we've got to be able to have the testing available so that when we do get an outbreak, we are on that and doing the tracing we need to do. And that is kind of the blocking and tackling of a public health system.
Brian, just got about 30 seconds here. Are you bracing your team and preparing your team, though, potentially for another second wave here? And just got to be quick.
Yes, we are. We are absolutely preparing for that wave, and we will pray that it doesn't happen. But we will be there, as we always are, to serve our communities safely, and that's really what we're all about.
All right.
Thank you so much.
We really appreciate it. Thank you so much, Brian Granulotti. A really thoughtful conversation, a realistic conversation about where we are on the medical front as it comes to the health system. Carol, he is the CEO of Atlantic Health System, joining us on the phone from Morristown in your great state of New Jersey.
In my great state of New Jersey, and just understanding a little bit more of what life is like on the other side. And I think, the more information we know, the more secure we will feel about kind of re-entering. And so it was really great to get some time with him. All right, coming up, we're going to check in on an interesting story that's in Bloomberg Business Week magazine this week, and it all has to do with that active-passive management, kind of at it again.
All right, let's get first to Nancy Lyons down in D.C. for some world national headlines. Hey, Nancy.
Hey, Jason. President Trump is indicating he is willing to consider federal aid to hard-pressed states within limits. Bloomberg's Irv Chapman has more from Washington.
The president spoke during his meeting with Florida Governor Ron DeSantis, whose effort to reopen the state for business he strongly endorsed.
I think there's a big difference with a state that lost money because of COVID and a state that's been run very badly for 25 years. We'd have to talk about things like payroll tax cuts. We'd have to talk about things like sanctuary cities, as an example. We're certainly open to talking, but it would really have to be COVID-related.
The president took issue with the Democratic leadership postponing the House's return to Capitol Hill, saying they're just enjoying their vacation. In Washington, Irv Chapman, Bloomberg Radio.
UN Secretary General Antonio Guterres sees the coronavirus pandemic as an opportunity to rebuild our world for the better. The UN chief says the brave, visionary, and collaborative leadership needed to tackle the coronavirus is the same needed to tackle other existential threats like climate change. Guterres is urging the European Union to put forward a plan to become the first climate-neutral continent by 2050. And he says other big emitters need to come on board, singling out the U.S. and China. Graduation 2020 will certainly have a different feel, with many schools canceling in-person ceremonies, so Facebook is stepping in to fill the void by broadcasting a live graduation event May 15th, with Oprah as the commencement speaker and Aquafina, Jennifer Garner, Lil Nas X, and Simone Biles offering words of wisdom. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
Why Why is delivering the best client experience a top priority at BNY Mellon's Pershing? Michelle Feinstein, Director of Client Engagement, explains.
Today's investors want a financial relationship that's on demand, customized, and leverages the latest digital technology. At BNY Mellon's Pershing, helping advisory firms and broker-dealers create great experiences for their clients is our priority. Through our integrated wealth experience, we give you a high-touch service, flexible technology choices, and expert insights, so you can deliver a highly personalized experience to your clients at every step, from onboarding to wealth planning, to performance analysis and more. And because we're part of BNY Mellon, you'll benefit from more than 230 years of strength and stability. At Pershing, we're personally invested in your success.
Visit Pershing.com to learn more about Pershing's integrated wealth experience. Pershing LLC and Pershing Advisor Solutions LLC are both members of FINRA and SIPC.
Are you interested in a challenge?
Fraudsters are getting more and more sophisticated, and it's easier than ever for people to make an honest mistake and lose their money. TSB doesn't think anyone should have to pay for being an innocent victim of fraud on their account. That's why they've created the TSB Fraud Refund Guarantee. To find out more, visit tsb.co.uk. Terms and conditions apply.
This is an important message from the government. For now, we must all still stay at home. It can be hard, but it's making a difference. So please keep going for the ones you love. Keep going for every key worker on the front line as they keep going for us. Keep going because together we will beat the virus. To all of you making sacrifices every day, thank you. Stay home, protect the NHS, save lives.
With the NHL season temporarily on ice, now is a good time to catch up on past games.
Bergeron, he scores!
With game replay on TuneIn, you can listen to every power play, slap shot, and goal of the 2019-2020 season so far.
Suter to Cunnin to Fiala, he scores!
And for a limited time, it's free for hockey fans everywhere. Search Classic Game Replays to start listening.
This week on the New Yorker Radio Hour, our writers fan out to report from across the city at the height of the coronavirus outbreak in New York.
I won't say it's business as usual, but, we still have responsibilities and we are handling everything. But, I'm not going to let COVID beat me.
That's the New Yorker Radio Hour from WNYC Studios. Listen to this episode on TuneIn today.
Be part of the sports conversation with Sports Talk Radio on TuneIn. Join the discussion around your favorite local teams with sports stations broadcasting in your area.
The game will be 185 to 183 and somebody wins, whatever. Football, it's either full go or it's not. You got it's thud. I can practice what they call
Follow
thud.
national storylines and debates with ESPN Radio.
Does the NBA have a hiring problem when it comes to front office jobs in the leagues and a minority hiring issue? Stephen A. chimed in on that today on First Take.
It also resonates with me, Max. You can appreciate this position. One of the candidates was Brian Colangelo. We know what happened. I like Brian, but we know.
And hear what's happening worldwide with international channels like Talk Sport.
Teams as I'm sort of doing my life in reverse at the moment. I was on cricket tours when I was 20 years old, and now I'm 31. I'm out sat at home injured playing PlayStation. So it's a tournament basically where you create your own character.
In your backyard and around the globe. Keep your finger on the pulse of the sports world with TuneIn.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Brian Windhorst and the Hoop Collective Podcast.
What about Giannis Antetokounmpo? He is going to be eligible to sign a Supermax extension, which we were projecting to be worth $240 million this summer. Well, if the salary cap drops, and even if he's wonderfully happy in Milwaukee, it may make no sense for him to sign when he can just wait a year and wait for the revenues to recover and then lock in.
Subscribe to Brian Windhorst and the Hoop Collective. Search the Hoop Collective to listen.
And breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take.
Update by Bloomberg. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. The Dow, the S&P, both higher. NASDAQ is lower. Bottom line, stocks trading mixed with a slide in the biggest. Tech shares weighing on major equity gauges as consumer confidence crashes and more companies withdraw their earnings guidance. Today, we heard that from both the UPS and also PepsiCo. S&P up 4 right now, a gain of 0.2%. The Dow up 64, up by 0.3%. NASDAQ on the minus side, down 55, a drop there of 0.6%. After the bell, we will be hearing from Alphabet, parent of Google. We've got Alphabet shares down 2.3%. 10-year up 16.30 seconds. Yield now 0.60%. Gold down 0.4%. 17.07 the ounce. West Texas Intermediate crude down 1.3% now, 12.62 a barrel. Recapping stocks mixed. S&P up 4, up by 0.2%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Jason Kelly, Carol Masser. I got to say, I'm just not sure how this is going to go today. It's just one of those days. It's one of those Lemonades Tuesday. Totally. And we're going with it as much as we can. Joel Weber is joining us as he does most days at this time. He, of course, is the editor of Bloomberg Business Week, as is Justina Lee, markets and quants reporter for Bloomberg, joining us on the phone from London. And Joel, I feel like this is almost like a little throwback to your time as editor of Bloomberg Markets. Like I'm digging this. I'm digging it. Tell us about this story.
So there was a kind of a Bloomberg News regular call about a week ago, and Justina kind of piped in with this idea that she was kind of noodling. And as she was describing it, I was just like, wow, this sounds so perfect for Bloomberg Markets. I want it for Bloomberg Business, and I want it for Bloomberg Business Week. And it's really about small versus big companies, which is one that I think, we're going to obviously spend a couple minutes talking about here. It's also going to be, I think, a theme that will resonate for the coming year for investors, particular, if not years. And what really caught my ear though was the word quants. So Justina, you want to figure out how to make sense of this for us?
Yeah, sure. Because essentially what quantitative investors do is that, they don't rely on human judgment. They use their computer models to try to find a couple of trading signals that they then apply across thousands of securities. And so I initially got this idea talking to a quant fund, and what they were telling me is that the dominance of all these mega cap stocks, like Netflix or Facebook, was really not good for their kind of strategies because they're essentially underweight mega caps given that they're so diversified. And I thought that was a really interesting kind of intersection of this nerdy realm of quants and also a phenomenon that I'm sure all of us are noticing in the market.
So what does it tell us about kind of what they're seeing? And because it's interesting, Justina, because we talk so much about active versus passive, right? And we know the passive play has been, done so well for so long coming off of the financial crisis and until recently. Kind of what did you take away from kind of doing this story and about that argument and that debate that's been going on?
Right. I mean, essentially, one trend that has been making it even harder for the active stock pickers is that, since the crisis, we have seen big companies get even bigger. Now, a lot of people think this is, a structural trend in the sense that a lot of the tech companies are taking advantage of essentially a winner-takes-all economy. And because as an active stock picker, you want to be different from the benchmark, so you want to feel like you have your own original ideas. So a lot of the time, you're naturally underweight large caps. But, when the big gets bigger, that's not an advantage for active stock pickers. And we've kind of seen that, ripple through the asset management industry with a lot of acquisitions and with even more people turning to ETFs each year.
So Justina, what about right of late? Just, the past few months have been so crazy. And, in theory, I guess maybe, a quantitative approach could take out the emotional effect. What's been happening with quants of late?
Right. I mean, obviously, I'm generalizing a little, but this year hasn't been great for quants either. And part of the reason is that, they tend to have more exposure to small caps, which have been underperforming. They also have more exposure to value stocks typically, which, as we know, have also suffered even more than growth stocks. And so it hasn't been a great year for quants either, but they're always saying, in every market, when valuations are so stretched between the winners and losers, there could be a snapback. And it's interesting because I think these past couple of days, you've seen a little bit of that, like small caps coming back a little. It's definitely far too early to say this is a trend.
Yeah, I mean, it's interesting, too. I mean, I guess, guys, to think about who the winners and losers are, at least so far in this. And I feel like we're going to get a little bit of a picture of this week, Carol, when all the tech companies are starting to perform. And Joel, it does take me back to some extent. And this company is mentioned in the lead of Justina's story. It takes me back to Zoom, which was the subject of a great cover story in the magazine a couple weeks ago. I mean, sort of discerning the winners and losers here, even from beyond the quant perspective, but just from a stock and a business perspective, it feels even trickier right now.
Yeah, and especially as if we think about the market share that sort of a situation like this pandemic kind of creates for like an Amazon, where you can just see like how a big company could really, really thrive here while so many small ones get hurt. But now that said, like, I recorded a podcast earlier with Eric Balchunas, and one of the things that he was kind of thinking about on the ETF side is just like, small companies have been so beaten down, and he just kind of has a theory that like you can only beat these things down so far. Like over the long term, we might actually see some of these the smaller companies and even the small company value ones really outperform over the next 3 to 5 years. So from a long term play, there might be something to that. Just like any reporting on that end from you.
Right, exactly. I mean, for my story, I spoke to the head of quantitative strategies in Northern Trust Asset. His name is Michael Hunstead. And what he told me is that the size factor, which is, betting on small caps, it's not dead. It's just that it's an incredibly long cycle. I think it's around 8 years in his research, meaning that you could be underperforming for 8 years, but if you stick it out over the long term, it actually still works out. Of course, the problem for most people, especially if you're a fund manager that needs to get paid, is that most people don't have that kind of patience. But if you do, the academic research indicates that exposure to small caps should still outperform over the long run.
I got to say, this is the kind of story that just, Joel, it just makes the market even more interesting as we try to figure out kind of what happens next.
Yeah, I mean, it's like, to me, it's like that great buy and hold lesson. Like if you can seriously like buy and hold it, it might be worth thinking about.
Yeah, absolutely. All right. It's a great story on the Bloomberg, one of the most read. Not surprisingly, it's in the upcoming edition of Bloomberg Business Week, so find it online or pick up the magazine when it's out later this week. Justina Lee joining us from London. Joel Weber, the editor of Bloomberg Business Week, joining us from Brooklyn. Carol, lots coming up.
Yeah, lots coming up. We are going to get a check on the day's economic news. And let's not forget, the Fed kicking off a 2-day meeting. It's began today. We'll get the conclusion of it and their decision tomorrow. So we'll see what they have to say about kind of where we are, what still needs to be done to kind of to help out the economy, and maybe what's still left in the Fed's firepower. It seems never ending.
Yeah, it does seem never ending. And even the idea, and we were talking about this with Seattle Mayor Durkin yesterday, that, the Fed sort of coming in and basically saying, look, we'll prop up the states and cities because no one else seems to be doing it. So we'll talk about what's happening in D.C. as well coming up. All right. Well, if you are listening to us here in New York, D.C., or San Francisco, watching on YouTube, Bloomberg Business Week continues. If you're listening on Bloomberg 1061 in Boston, Bay State Business, that is coming up next.
Yes, indeed. All right, stick around. You're listening to Bloomberg Business Week. Carol Massar, Jason Kelly, and this is a little bit of a wacky Tuesday. This is Bloomberg.
Business is like a puzzle.
While most of us are looking out for each other at this time, sadly, fraudsters are trying to take advantage of the situation. Here's Chris Ainsley from Santander with advice for keeping your money safe.
Please be wary of people you've met online who claim to be stranded abroad and urgently need money. Always take time to think before you act, and if you think you're the victim of fraud, then let your bank know right away.
For more advice on keeping your money safe, visit santander.co.uk.
This is a message from the government to all essential workers. You're doing vital jobs to keep our country going, and you can now get tested for coronavirus. From health professionals to emergency services, from delivery drivers to grocery workers, from teachers to care workers. Tests are available for you and anyone in your household who has symptoms. For a full list of all essential workers eligible and how to get a test, go to gov.uk/coronavirus.
This week on the New Yorker Radio Hour, our writers fan out to report from across the city at the height of the coronavirus outbreak in New York.
I won't say it's business as usual, but, we still have responsibilities and we are handling everything. But, I'm not going to let COVID beat me.
That's the New Yorker Radio Hour from WNYC Studios. Listen to this episode on TuneIn today.
Get your MLB fix with these great podcasts on TuneIn. Fill your seventh inning stretch with the Ringer MLB Show.
I just can't get over it. It's like, Jeter Downs. Didn't realize he was a top. Like, my dad is drinking the Kool-Aid on this. He's like, of course. Mookie was going to leave. I'm like, what do you mean? You don't know that.
Slide into second with the Starting Nine podcast.
Nolan Arenado slides right into the top spot for favorite baseball player. Active in the league right now. It is a pleasure to be sitting next to you, sir.
Thank you, man. I appreciate it. Thank you.
This is we've been waiting a long time for this. We actually, in terms of active
round the bases with the Statcast podcast.
Ways of going about it. I picked third, so in some ways it made it easier for me. Mike, just to go over the first couple of picks. Mike took Barry Bonds, who I think was kind of the obvious guy to take number one. Not only
catch these and more MLB podcasts right here on TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Stay on top of everything happening in the pro wrestling universe with the Body Slamming podcasts on TuneIn. For passionate recaps of the most recent SmackDown to a pro wrestler's perspective on life and culture at large, search sports and scroll down to the world of wrestling to listen.
4 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading on this Tuesday, April 28th. We've got the Dow, the S&P higher, NASDAQ lower, S&P up, barely up now by just half a point at 2879. The Dow up 41 points higher by 0.2%. Weakness in technology sending NASDAQ lower down 67 points, a drop there of 0.8%. Some of the tech names that are moving lower include Facebook, which reports tomorrow down 1.7%. Apple down 0.9%, and Netflix shares lower now by 3.8%. The 10-year up 16/30 seconds with a yield of 0.60%. Gold is down 0.4%, 17.07 the ounce. West Texas Intermediate crude oil flat at $12.78 a barrel. Former Federal Reserve Chairman Alan Greenspan says the coronavirus is having a profound effect on the U.S. economy, but it should be able to stage a strong comeback. He spoke exclusively on Bloomberg Television and Radio with our David Weston.
The issue of the virus works its way the way we expect. We probably have a very strong third quarter, but my concern is the fourth quarter and beyond. It's the years ahead where the changes have got to be made.
BP is bolstering its financial reserves as the initial stages of the coronavirus pandemic caused its profit to plunge and increased its debt. BP ADR is down now by 0.4%, but a lot of the other oil stocks, oil majors, are pushing higher. ExxonMobil, for example, up 2.6%. Chevron up by 0.6%. Conoco rallying right now by 4.2%. Again, the 10-year, the yield there 0.60%. Stocks trading mixed with the S&P up by 1 point now, higher by 0.1%. NASDAQ is down 65 points, lower by 0.8%. And the Dow Jones Industrial Average at 24,180. The Dow up by 47 points. That is a gain now of 0.2%. Gold again down 0.4%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
All right, you're listening to Bloomberg Business Week. We are awaiting some comments by the president in the Rose Gardens. We'll take you down to Washington as soon as that kicks off. In the meantime, let's talk a little Business Week economics with Bloomberg's global economics and policy editor Kathleen Hayes and Bloomberg Economics chief U.S. economist Carl Riccadonna. They join us from Pennsylvania and New Jersey, respectively. Carl Riccadonna, I want to start with you. All eyes on D.C. tomorrow, huh? Or today? Really starting today, but the us mere mortals will hear from Jay Powell and co. tomorrow.
Well, I guess we should say all eyes virtually on D.C. tomorrow because it will be a conference call, a video conference type of meeting. There will be a press conference 30 minutes after the statement is released. I don't think we should be looking for any fireworks from the Fed at this point in time. We've kind of lost the significance of actual meeting dates as the last meeting was canceled and the last regularly scheduled meeting was canceled, and we've had all these ad hoc meetings as the crisis has ebbed and flowed in the interim. So I think there's enough policy measures put in place that tomorrow is really a time for policymakers to convene virtually, that is, to really assess where we are in terms of economic performance and also kind of reevaluate the programs, that the really laundry list of programs that have been put in place to support not only the economy but also market functioning.
Kathleen Hayes, what do you think we're going to get from the Fed?
Well, I think first of all, a couple of stories I must recommend, and one of them is from our Fed Eco team, Matt Boesler. Federal Reserve has a big decision to make about giving more guidance on rates, and he cites Krishna Guha, who ran communication strategies, things like that at the New York Fed years ago. He's the vice chairman at Evercore now. Simon Potter and he came together and said the Fed should issue some forward guidance saying they won't move off of the low key rate and all the special things they're doing. I believe until unemployment hits a certain level, because we know it's going to go up to 7, 8, maybe even 10%. Who knows? Pick your number. And if I'm not mistaken, because of all these meetings and even the regular meetings they've been avoiding giving us dots. And some people think they deliberately didn't do that because do you really want to be pinned down on any kind of economic forecast right now, right? So I think it'll be very interesting to see if they, if they wade back into those waters, and I hope the reporters who are there asking them questions ask them about that. And remember, they're going into this with, we're going to have the GDP number, the longest expansion on record, is going to end, right? We're going to have a jobs report a week from Friday that's probably going to show this gigantic loss of jobs. Unemployment's going to rise. We saw the drop in consumer confidence, a drop in exports today. I can understand why Simon Potter and Krishna Guha would be arguing for the Fed, reassuring people of forward guidance. But I think Jay Powell has already made it pretty clear they are not going to look at raising rates for a long time. They're not even thinking about. They're just, I think, wondering and hoping, fingers crossed, that they don't have to do a lot more, that maybe the virus is peaking, maybe we can start reopening the economy and get things back on track that way.
So, Carl, the data that Jay Powell and his team are looking at, you're looking at a lot of the same data. Maybe they have slightly better data, but I trust you and the team implicitly. What should worry them the most as you look across the various inputs here?
Well, what worries them the most, and certainly we have excellent data. There's no better data, Jason, than the data on the Bloomberg terminal. But that being said,
preach, Riccadonna,
preach. That being said, what's of concern to the Fed here is that we really don't yet grasp the full extent of the contraction we're looking at in the current quarter. So my team did some modeling, and we're looking for something on the order of 3 times as large of a peak to trough decline as what we saw during the global financial crisis back from 2007 to 2009. What makes it even more impressive is that it is happening basically in a 2-quarter period. As Chairman Greenspan highlighted in the opening of the segment, we do expect the economy to return to growth in Q3 as these lockdown measures are removed. So we're looking at an exceptionally fast and exceptionally deep recession for the economy. And so the Fed really can't give guidance about, forward guidance about low rates for a long time until we have a sense of how deep the contraction
Sorry, what's the
is.
timing guidance?
is looking for about a 37% contraction in GDP in this quarter at an annualized rate. So a stunning decline there. And really, I think better than looking at timing, the Fed should really send some signaling that they won't be normalizing interest rates until all of these other measures have been unwound, the laundry list, and also until we basically get the unemployment rate back down to about 5%, which is going to be a long ways away. Yeah. I'm thinking interest rate hikes in 2022 or 2023.
Okay, that's what I was going to ask
23,
you. I mean,
wow.
Well, I was just going to say to you, or both of you, Kathleen and Carl, in terms of normalization when it comes to interest rates, man, we've had low rates for a long, long time.
Well,
do they ever get significantly higher, Kathleen?
Well, I hope so in a way, right? Because if they don't, it means that we are not able to use up enough of the excess capacity, and we're not able to boost wages enough on average for, the average working person, that prices will rise, that inflation will show some upward momentum, and that the Fed will think, we better get rates higher. And I think down the road, the tougher question for them will be these programs. I think in some way they'll be easier to start winding down because they'll say we don't need them. We're already doing less, repos, the repurchase agreements every day. Another story, though, quickly I'd like to recommend is one. There were three authors. One of them, Craig Torres, who's been covering the Fed as long as I have, from our eco team. He wrote with a couple other people about, the junk bond facility, the money for that coming into a little bit of trouble. There was a loophole. I don't know if you guys saw that story. It's hard maybe for some of the corporations that really need it to get the money they need because this little thing that was put in there. That's important.
About that. It is important. Sorry, I think Eric Schatzker, right? Eric Schatzker wrote it. Yeah, we're going to actually check in with Eric because it's a very important story. And as we watch the flows, listen, we knew the flows of money from DC was not going to be perfect. And as many of our guests have said, if there's a few mistakes, that's okay to make sure at least people get the money. But we're finding that some of these mistakes are pretty egregious and really preventing it from getting where it needs to
like the Lakers and Shake Shack and all
just
that
saying.
stuff.
Just
yeah. All right, Kathleen Hayes, Carl Riccadonna, thank you both so much. We know we'll be checking in with you over the next couple of days. An exciting couple of days in Washington, or as Carl said, virtually. I wonder if we're going to get like a peek via Zoom into Jay Powell's house. Bet it's a nice house.
I bet it's a nice house.
Yeah.
He's got a lot of books behind him, probably.
Yeah. Speaking of DC.
He's got like video games behind him? Or probably not.
Let's head to Nancy Lyons in Washington, end this madness, and give us some world and national headlines. Hey, Nancy.
Hey, Jason. White House economic advisor Kevin Hassett says the country needs to brace for a spate of upcoming negative data. He's also addressing comments he made comparing the current unemployment situation to the Great Depression.
Well, I'm not saying that we're going to have a Great Depression, but what I am saying is prepare yourself because just about every number that comes out, and we'll have GDP tomorrow. I don't know anything about the number, but GDP tomorrow will probably be a negative number, and then that'll be just the very tip of the iceberg of a few months of negative news that's unlike anything you've ever seen.
Hassett says he expects unemployment rates of 16% to 20% by June. The Trump administration's new plan to scale up coronavirus testing is being met with immediate skepticism.
Despite what President Trump says, we're doing everything in our power to heal the sick and to gradually reopen our nation. State leaders say the federal government is still not doing enough to help them obtain tests. And the administration's new plan leaves states and cities in charge of solving the testing shortage. L.A. Mayor Eric Garcetti.
I do believe that a strong national government should be the ones procuring things so we're not competing against each other. Whether it's 79 cents for a mask or $7 for a mask is an embarrassment.
Public health experts warn that U.S. testing capacity, while improved, remains a fraction of where it should be, and it could take weeks to get there. In Washington, Martin DeCaro, Bloomberg Radio.
Well, the U.S. House will not be returning to Washington next week. Majority Leader Steny Hoyer says there's concern about the growing spread of coronavirus in the region. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. Back to you, Carol and Jason.
All right, Nancy, thank you so much. You're listening to Bloomberg Business Week. Well, we're learning a lot about, how people work at home. We were joking a little bit a few minutes ago, Carol, about, wanting to get that Zoom image of Jay Powell's home office. But there's a lot of wood.
Do you think he wears sweats when he's working at home? Like, what do you think?
I bet he's like all suited up.
He's all suited up?
Yeah.
A lot of wood paneling, like
he's
a
old school. Oh, yeah. I sort of think about those movies, like All the President's Men and things that are set in Washington. I'm sure he has a nice house in Georgetown and, a very nice library where during a dinner party you'll call someone in and be like, Carol, we need to have a conversation about something of utmost national security.
Fire burning in the background.
Yeah, exactly.
Little dog on the carpet.
I've been watching too much Homeland. In any case.
I just saw the last one.
Don't say a word.
I'm not going to say a word.
Say
but I have to say there was some controversy about how it ended, and some people didn't love it. It was
Don't say that.
Perfection.
Okay, don't say another word.
That means nothing except that it was done well. Something to look forward to.
All right. God, you're really up in the camera there when you're talking to me like that. Meanwhile, well, first of all, we just started season 7, so we're getting there.
Oh, you're close.
Yeah, getting
well
close.
Done.
All right. So meanwhile, back in New York, or actually this story takes place in Toronto. It's one of our most read. I'm going to read you the headline. Push-ups and 60 direct lines help chief trader keep laser focus. It's pretty amazing. Divya Balji wrote this. It's about a trader, and it just goes through his whole routine about what he is doing and how he is coping with basically doing a job that obviously requires a huge amount of technology from home.
Yeah. Well, what's really cool is he talks about how he starts his day, jump on the elliptical machine in his basement, quick workout, he's scanning emails, market news. What's interesting is he's finding the experience better than expected. So much so that he's considering creating a work-from-home rotational program for his team. And what he's finding is that there's not all those distractions, so he finds himself laser-focused on each trade and his team as efficient as ever. So we will see if that WFH home works.
Work from home?
Sorry. I was racing against the clock, and I realized we didn't have to race the clock. Yeah, but this whole idea from working from home, whether or not it is as productive. I don't know about you, but I feel very productive.
Oh, yeah. You have been very productive, I have to say.
I know.
You've been all over it, coming in hot sometimes. But
I know, sending emails at all different times.
Yeah,
but it's amazing what you can do when you can kind of just focus on a certain task at hand, get it done, and move on, right?
Yeah.
And send out everything that needs to be done, and it's not like hanging over you. I find that incredible.
Yeah. All right. Let's get a check on what's happening in the business world while we work from home. Charlie Pellet, he's not happy about being there, but
I'm not. But something Carol said resonated with me. You focus on something, you get it done, you get it out the door. Yeah. Totally agree with that. So in that regard, working at home is okay.
And then sometimes your wife brings you pizza.
Right, and that's nice too. Here's what's going on. 45 minutes to go ahead of the closing bell. We've got the S&P up 3, a gain of 0.1%. Dow Jones Industrial Average up 70, higher by 0.3%, and NASDAQ lower now by 60, a drop there of 0.7%. Biggest U.S. tech shares slumping, weighing on major equity gauges as consumer confidence crashes and more companies withdraw earnings guidance. After the bell, we will be hearing from Alphabet, parent of Google. Its shares lower now by 2.7%. 10-year yield 0.60%. Gold is down 0.5%, $17.05 the ounce. And crude West Texas Intermediate all over the map today, lower by 9 cents, now down 7 cents, $12.69 the ounce. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, we are awaiting the president down in Washington. In the meantime, let's get a check on what has been going on in Washington, because it's been a lot as we have digested this whole new stimulus/rescue as Congress weighs when it's going to come back or not, as they think about the next leg of this stimulus package. To explain all of that, Josh Wingrove joins us on the phone, Bloomberg News White House correspondent. All right, JW, what do we need to know? What's the most important thing we need to know about what's going on in Washington, especially as it relates to the business world?
It's that no one has any idea what is going to be in this phase 4 bill or how far out they want to put the fences on this thing. There's a report now that Mitch McConnell is pushing against the idea of infrastructure funding being part of that. You'll recall that President Trump had wanted that to be. So that's an interesting tension that we'll keep an eye on. We don't know whether they'll need more money for that Paycheck Protection Program, that small business funding mechanism, which we've already topped up once. We don't know what the price tag will be. And, of course, the Democrats, one of their core asks is money for states, and we don't know where that's going to go either.
All right. So we're
Josh, hang on for us for just a second. We are getting word that President Trump is walking out into the East Room. We are going to take you there as soon as he begins speaking. Obviously, he is addressing a lot of the things we're talking about with Josh Wingrove. Let's go to the president.
Social distance on your mind, and that's a very good thing, Jovita.
Congratulations. Tremendous job you're doing. I want to thank everyone for being at the White House, a very special house, a very special place, no matter where you go in the world. I love the White House, and being here in the East Room of the White House in particular, where so many important functions have taken place over the years. And today we're really celebrating American workers and small businesses, and we've done a job for you, and we're going to make it so as we open up our country, you're going to be in good shape as opposed to be either losing your business or how do we get some people to work here, especially since your employees were so good over the years, and those are the ones you wanted. So we made that possible for you. We're delighted to be joined this afternoon by representatives of several incredible small businesses from across our country. Also with us, our Treasury Secretary, Stephen Mnuchin. Steve, thank you very much. And SBA Administrator. You've been busy, Steve, by the way? A little bit, right? Broke every record in the book. And SBA Administrator Jovita Carranza. Thank you, Jovita. Have you gone to sleep in the last 2 weeks? I don't think so, right? You broke every single lending record, numbers of loans, amount of loans, small business. It's actually a very big business when you think about it. Thank you very much, Jovita. Great job. As our nation battles against this terrible scourge, we continue to pray for the victims as well as for those Americans who are grieving their lost ones and their loved ones. There's never been anything like this. We suffer with one heart, but we will prevail. We're coming back, and we're coming back strong. We built the greatest economy anywhere in the world 2 months ago, and we're going to build it again. We're going to build it fast. It's going to go very quickly. And Larry, thank you for being here very much. You see what's going to happen. I think you have the same feeling as I do. It's going to come back very fast. Now that our experts believe the worst days of the pandemic are behind us, Americans are looking forward to the safe and rapid reopening of our country. Throughout this ordeal, millions of hardworking Americans have been asked to really make tremendous sacrifices. It's sacrifices like nobody thought would even be possible. Nobody thought would ever be talking about something like this. This virus has inflicted an enormous and painful toll on our nation's workers and small businesses. That's why last month I asked Congress to pass the Paycheck Protection Program, giving small businesses emergency economic relief to keep workers on the payroll. 4 weeks ago, I was proud to sign it into law. We did that at a great ceremony with many of the people here and the officials here, and it was something. And I can tell you, I'm going to ask Steve to say a few words, but the kind of numbers and the kind of jobs they've done and the kind of jobs that have also been saved, it's incredible. You'll be seeing that in the coming weeks. The Treasury Department and the Small Business Administration launched the program in record-breaking time, just 1 week, and in the 14 days following its launch, we processed as many loans as the SBA would typically process in over 14 years. So in 14 days, they did more work and more loans, both in terms of applications and in terms of dollar amount, than they did in 14 years. 14 days, 14 years. Easy one to remember, right? That's some record. The first round of funding provided more than 1.6 million small businesses with over $340 billion so that American workers can retain their jobs, receive their paychecks, and help our economy take off quickly once America reopens for business, which is happening right now as we sit. We're going to be all set. You all ready? I know you are. I talked to you back there. You're ready. You folks are ready. Our swift action supported or saved 30 million American jobs at least. And last week, Congress answered our call to replenish the program, and I was honored to sign an additional $320 billion for American workers into law. At least $60 billion are reserved for community financial institutions, including those that serve minority and distressed communities. And that's also, when you think it's African American communities, it's Hispanic American communities, it's Asian American communities. We began accepting applications for the second round of funding yesterday. Demand is extraordinarily high, and there are already twice as many users accessing the system as on any day under the first round. And one of the things that the Secretary of the Treasury told me is that the amounts are much more loans at much smaller amounts. And we like to hear that because we're looking at the small amounts, the smaller businesses, and that's what we want. Nonetheless, we're processing loans at a pace never achieved before. In the first 24 hours of the second round of funding, we've handled over 30% more loans than any previous day of the program. So far, we've processed an amazing 450,000 loans totaling over $50 billion. That's in phase 2. That's incredible. Along with Administrator Carranza and Secretary Mnuchin, Ivanka has played an essential role in spearheading this important program. Incredible role. That's what she wants to do. She wants to help people. From the beginning of my administration, Ivanka has used her experience as an entrepreneur to fight for the American worker. She's created many jobs. That's what she did when she first came in. She just wanted people to be able to get jobs and job training. Went to the biggest companies anywhere in the world that are located in our country, and they would take hundreds of thousands of people and train them. And I think you got up to almost 15 million people, right? 15 million. She started off with a goal of 500,000. She wanted to get 500,000, and she is now on almost 15 million people. And I'd like to ask, if I might, Ivanka, to say a few words as to what's exactly happening today, what's happening over the next week, and what her views are for what's going to happen over the next period of time. It's going to be something I think is going to be very special and bigger and better than anybody really understands. Let's see if I'm right about that. Ivanka, please.
Well, thank you, everyone, and thank you, Mr. President, for convening this incredible group of entrepreneurs and small business owners who very much represent the soul and the spirit, the grit and the tenacity of America's small business owners across the nation. So we're grateful to each and every one of you for joining us here today, and very excited to hear your stories and hear specifically about how you're going through this challenge and how through the Payment Protection Program and through the PPP, you are able to keep your workforce employed. It's about your businesses thriving and growing within your communities. It's about your workforce, who each of you cares very dearly about. And I'd like to make a special call out of thanks to Secretary Mnuchin for his tireless work on this front. So if you'd like to come up and join us, we would appreciate that, Secretary. And SBA Administrator Carranza, thank you. You have been such a champion for America's small business. If you'd also like to come up and join us. And Larry Kudlow, thank you for all that you do in fighting for American workers. With that, I would like to kick us off by introducing Amy Wright to come up to the stage and share with us a little bit of her story. She has created an amazing business that stemmed from personal experience and very much her heart. And it's been an honor getting to know you, Amy, as you really embody the spirit of small businesses around this country. Amy, because of the PPP program, was able to rehire.
All right, so you've been listening to the president giving an update on some of the aid to help out small businesses and individuals, and of course Ivanka Trump there talking as well and going through some of her involvement. So, Jason, we'll continue to hear these. Certainly the president continue to draw on groups from the private sector and from industries and talking about, the impact of some of those programs and also what still needs to be done.
Right, and we will keep an eye on that event down there in Washington at the White House. If the president starts taking questions, we will take you back there and continue to monitor anything that he and the team are saying. I mean, this is an issue that we've been talking a huge amount about. It is front of mind for so many people because of the importance of small businesses, Carol, to this country. We see them in our neighborhoods. We have family and friends who own and work at small businesses here, and they are hurting. You heard the president mention that double the number of people who are accessing the system before accessed it yesterday. Right. I feel like he was saying that in sort of a boastful way, but the reality is that's not great, but in the sense that it means that a lot of people need money. I mean, they need essentially some help surviving this terrible, terrible pandemic.
Yeah, exactly. And it's interesting to hear the president say that small business, they will be in good shape. And I think there's a lot of questions still about them because these are businesses that don't necessarily have a big safety net. And so whether or not they will be able to still continue to open and exist on the other side of that, I think there's a lot of questions. And, a lot of people being able to access a program also is a reminder of those who couldn't maybe access it on the initial round of it. And so people are pretty desperate. I mean, I've been watching a lot of the news coverage. I know you have too, about people, who individuals as well as small businesses that they've run out of money. They've got nothing.
Right. Well, and the notion is that if you run out of money, it's unlikely that you're going to be able to restart just right off the bat. You're letting employees go. Mm-hmm. You're having to shut down. There's a whole question of, are landlords going to give people a little bit more leeway, and for how long? They ultimately have to pay their bills as well. That whole supply chain that we talked about with Kent Swig last week, in terms of, was it last week? Earlier this week? It was last week.
It was last week. But, and also, what's the liability, right, of if you do get a break on paying mortgages or rents or what have you, but you still have to pay for it on the other side, and then you're going to come back
deferring,
and you're going to come back to a business environment, economic environment, or maybe your customer base is cut in half, and so you're not going to see the same cash flow and revenue flow that you saw pre-virus.
No, that's a great point.
So I just think it's really tricky, and I hope we continue to spend a lot of time. I know you and I both find this a really important issue at this point, and we're going to continue talking about it, but I do hope it's getting the attention of certainly all the lawmakers that are in there in Washington, really, and also in those hardest hit states.
Absolutely. All right, let's get a check on what's happening in the trading day and in the world of business. A little more than a half hour to go in today's trade. Charlie Pellet, bring us up to date.
Thank you very much. Here's what's going on. 31 minutes to go, as you say, until we get that closing bell. We've got the Dow, the S&P both higher. Little changed on the S&P right now. NASDAQ is lower. S&P up 2 points, a gain of 0.1%. NASDAQ slumping 63, down 0.7%. And the Dow Jones Industrial Average is up 86 points, a gain there of 0.4%. Google, after the closing bell, down now by 2.7%. Rough day for a lot of the tech names. Apple, for example, down 0.9%. Facebook is down 1.9%. Netflix shares lower now by 3.6%. President Trump plans to order meat processing plants to remain open as the nation confronts growing food supply disruptions from the coronavirus outbreak. This according to sources. Tyson shares, they are up now by 5.7%. Tyson is the nation's largest meat processor. The nation's nurses are on the front lines when it comes to handling coronavirus patients, working long hours in our emergency rooms. Nisa Ernst is nurse manager at the Johns Hopkins Bloomberg School of Public Health, and on Bloomberg Television this morning, she talked about one of the lessons her team has learned.
One of the other things that this pandemic has shown us is that we're a big institution. We're no different than a lot of other healthcare institutions. We're big, we're lumbering. It takes us years to make a decision. This pandemic has shown us that there are people right at the front line who make excellent decisions in a very short period of time that make a huge difference in a patient's outcome.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropy. Xerox Holdings, which last month dropped a hostile takeover bid for larger rival HP Inc., has withdrawn its annual revenue forecast. Xerox shares right now, they are higher by 0.5%. HP Inc. up today by 4.3%. And Apple's retail chief has told staff she expects the company to reopen, quote, many more of its retail stores in May after closing all locations outside of China in March because of COVID-19. Apple shares, they are lower. Apple down now by 0.9%. Gold down 0.6%, $17.04 the ounce. Crude, little change now, up 2 cents, $12.80 a barrel. Recapping, S&P up 3, up by 0.1%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week right here on Bloomberg Radio.
I don't know.
That's all you got?
Yeah, that's all
I don't know.
Yeah.
I'm not so sure about it. I feel like that would have been it almost made the Once Upon a Time in Hollywood soundtrack. Okay, like sort of California in the late 60s, Dave. What's going on there?
Yeah, you're getting there. You're getting there really fast. You're in the ballpark.
All
the
right.
Holly part, especially.
The Hollies?
Congratulations.
Thank you.
A song
That's
called
nice.
King
That was a
Midas
team
in
effort.
Reverse that was actually written by Graham Nash. He was with the Hollies before Crosby, Stills, and Nash and all the rest. So, that Southern California thing you were hearing in there, Jason, that was pretty much on target as well. Not bad.
Yeah,
Anyway.
pretty good. Sometimes together we have half a brain when it comes to this stuff.
It's so
Alrighty then.
To a lot of, actually, for a lot of stuff.
For a lot of stuff, exactly.
Yeah, I
It's
hear
team
you.
effort.
The reason why I picked the song is the magic word reverse. And, this all has to do with a comparison that Jonathan Krinsky over at Baycrest Partners, he's their chief market technician, made in his latest research between the S&P 500 and what's called a reverse cap weighted version of the index. Typically when we talk about smaller companies versus larger ones, and if you're focusing on the S&P 500, there tends to be a focus on an equal weight version of the index where every company counts the same. Well, the reverse cap weighted index takes it a step further. The smallest companies in the index have the highest weight and vice versa. So, the likes of Amazon, Apple, Microsoft, they're rounding errors, in essence, in the reverse cap weighted index. And Krinsky points out, if you go back and look at lows in 2009 and 2011 and 2016 and 2018, you saw this reverse cap weighted index do better than the S&P 500 in the first month after those lows were reached. So in other words, you really did see smaller companies with bigger gains. So what's happened in the month after the low of March? Not the same performance. And that's what the chart shows you, that basically the reverse cap weighted index and the S&P 500 have kind of gone back and forth. It's not like the smaller companies are dominating the way that they did in those earlier instances. And for that reason, Krinsky concluded that we really haven't seen what he called a meaningful low in the S&P 500 yet. Now, does the last couple of days change the equation? Maybe to some extent, but not so much, at least for now, that you can really kind of see what we've had in the past month in the context of those earlier recoveries. That's the point.
Can I just say, there's definitely a theme going on. I just think about the story, Jason, that's in the magazine this week that we talked earlier with Joel Weber and also Justina Lee out of London. And that was a passive versus active, but it was also looking at the relationship of small cap stocks that quants can usually play and do really well with versus some of what we're seeing in large caps. I just feel like, Dave, there's a lot of conversation trying to figure out the relationship and what's going on between small and large cap stocks.
And absolutely. The last couple of days, we've seen the smaller companies do relatively well, but it's been arguably a long time coming, at least when you look at the previous month. And maybe that's enough for now. If you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
All right, Dave Wilson, thank you so much. You'll be back with us a little bit later on, less than a half hour from now, in fact, to bring us your stock of the day. I have to say, Nancy Lyons, one of our news colleagues.
Did you just go to this? Is it
I did. I totally went.
It's Room Raider, right?
It's called Room Raider. So the Twitter handle is @RateMySkype Room.
Right.
It's called Room Raider, and basically she picked up on it because we were talking about what we imagined Jay Powell's Zoom would look like, and you go through, and it's basically they're literally rating on a 10-point scale how good people's backgrounds are. Yours is much better than mine, Carol. I have to say.
Wait, did they rate me?
No. I'm saying I'm looking at yours. And you and I hosted a virtual event a couple weeks ago.
This was just classic you versus me. So here we are, we're hosting that virtual event. And it was just, you go to my background and it's just packed full of bookcase with a ton of books and stuff. Go to yours and it's a white a white room. And I know it's Alice's room.
Well, here's the dirty little secret of what I had to do when we were rehearsing and sort of getting everything set up. I literally had to take the changing table down, take the changing pad, and I mean I'm looking at it now, and the baby wipes and the little night light. I had to take all that, put it on the floor, and then go into our other room, get a bunch of books, and stack them there. And then there was a whole debate about how do you curate the books, and are people going to be looking at them? We had a big debate in my family as whether you put your own book on there, whether that's a flex,
well, don't you think about
or whether
that
that's obnoxious.
No, you should put your own books because they're really great. But I mean, what's interesting is our producer at the time, Meg Szabo, she was like, Jason, can you do something with your background?
Yeah. She was like, I mean, the baby stuff is interesting, and I mean, it is a different time, but maybe some books. So I was able to change that out. So I have them literally stored in Alice's closet if I ever have to crack them out again.
I got to tell you, there's a story that's catching my attention. It's among the most read. I think it might be the most read on the Bloomberg right now. Governor Andrew Cuomo said it would be a, quote, miracle if New York City and the downstate region reopen in 2 weeks. New Jersey, meantime, reported a higher increase in coronavirus deaths than New York for the first time. So, yeah, that's where we are.
Well, I have to say, I'm not shocked to hear that. I mean, just in the sense that, and not the New Jersey part, I was actually a little bit surprised about. But
they've been having a tough time.
Although the gentleman we had on earlier, the individual who runs the hospital system there in Morristown, he was talking about how it actually tracks the transit in many ways. That the outbreak in New York City and how it's moved into New Jersey tracks. I mean, the downstate versus upstate here in New York, I think, is not surprising at all, given the magnitude of the outbreak here, downstate versus upstate. And I have some relatives through my wife who live up in Delaware County and beyond, and it's a totally different picture up there. There's obviously social distancing going on, but it's the country, so there's some natural social distance, and yet they have been shut down largely to the same extent we are at a place where there are exponentially more cases here versus there. So I do understand that regional approach on the part of the New York governor.
And the New Jersey governor, Phil Murphy, saying earlier today that in New Jersey, the state is, quote, a number of weeks away from reopening. So, I mean, we're talking more about it. We're figuring out how to do it. And I feel like our conversations have been very constructive in thinking about, okay, what's this world like so that it's safe for everyone out there.
And look, we're talking about weeks, not months. So that's a good sign, at least for the moment. All right, let's get to world and national headlines now. Back to Nancy Lyons. Hey, Nancy.
Hey, Jason, members of the U.S. House of Representatives will not be coming back to Washington next week. House Majority Leader Steny Hoyer says there are concerns about the growing cases of coronavirus in the nation's capital. President Trump is less than supportive of that decision, though.
They don't want to come back. I think they should be back here, but they don't. They're enjoying their vacation. And they shouldn't be. This is a time. They are. I think they are. If you look at Nancy Pelosi eating ice cream on late-night television, I think they probably are. They're having a good time. I think they should be back. I think they should all come back, and we should work on this together.
Trump spoke while meeting with Florida Governor Ron DeSantis at the White House. The two spoke about reopening guidelines. They brought up how airlines need to do more to check passengers on international flights.
If you're going to fly to Miami, then the airline should give you the Abbott test and then put you on the plane. But
would you ever want to ban certain countries?
If they were seeding the United States, I think you'll let us know.
You'll be watching, and you'll let us know.
DeSantis says he's not putting a date on when his state will reopen, even though Florida's stay-at-home orders are set to expire on Thursday. Essential workers in New York City today received a noisy thank you. In perfect formation, the Air Force Thunderbirds on the right, the Navy Blue Angels on the left made a flyover above the city. They were paying tribute to those on the front line of the fight against coronavirus. One of the flyovers was the Brooklyn Hospital Center, where Dr. Anthony Fauci was born. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. Back to you, Carol and Jason.
All right, Nancy, thank you so much. Thanks again for the inspiration.
Can I just say, I have slipped down the rabbit hole with that website.
Oh, the Room Rater? Yeah. Well,
it's just really funny, some of the the comments.
I know. Now I feel sort of self-conscious, and I feel like you flexed on me a little bit by being like, oh, I have all my lovely books because I'm so well-read.
No, but it was so indicative of you.
Room.
I'm always surrounded by so much stuff, and you're always so, like, streamlined, although your desk is messy.
My desk is messy. It's not as messy as yours, but it's messy.
No. But it's just like you're always kind of so streamlined, like when we pack or go somewhere, and it's like, you're in a paper bag and I'm in, 5 suitcases, and it's just kind of very indicative of.
By the way, that came up over the weekend because I got a belated Christmas present, and it's a really sleek, like backpack type bag, and I cannot wait to travel with you again when you show up with your like comically large number of bags, and I'm like with my little backpack. It's got a laptop sleeve. It'll be good to go. Meanwhile, we are tracking very closely what's opening, what's not. This is a company both you and I think, really like. Harry and David love their peaches and
given gifts,
all of their
receive
good
gifts
fruit.
from them. Yep.
Yeah, absolutely. They're saying their stores won't reopen until after the coronavirus. And it's interesting, as you say, known for their gift baskets. They are owned by 1-800-Flowers, which actually I didn't know. The only store that will
We've
remain.
talked to them about this. Yeah.
Yeah, the creator of 1-800-Flowers. I guess I'd forgotten that they own Harry and David, but only store that will remain open is a location near Harry and David's main operation and orchards out in Oregon.
So permanently closing their bricks and mortars locations, or pretty much all of them.
Yep. Yeah. So, it is mostly e-commerce, so that makes sense. I've never been to a Harry and David store, and as you say, I know I've received a lot. I don't know if I've ever bought anything that nice for anyone. I'm not that generous, but I do consume Harry and David pretty frequently.
Yeah, but it's interesting, and they've been struggling. So, maybe not surprised to see this news, certainly at this time. All right, you are listening to Bloomberg Radio.
Headquarters, I'm Charlie Pellet. We've got 17 minutes to go ahead of the closing bell. It has been a seesaw session for the S&P. NASDAQ lower all day long, the Dow holding on to a gain. Let's find out what's going on with the markets. Let's head over to the first word breaking news desk for today's afternoon call. Here he is working from home, Bill Maloney.
And good afternoon, Charlie. U.S. stocks off their highs in a mixed session. Dow's currently up 72 points. S&Ps are unchanged. NASDAQ is lower by 75. The U.S. 10 yield at 0.6%. WTI crude futures are a little changed. Gold is down 6, and small caps rise 2.5%. Leaders to the upside in the Dow, American Express, Dow Inc., and ExxonMobil, while Merck fell 2.3% after earnings and led to the downside. Also after earnings, Harley-Davidson surged 16%, UPS fell 5%, and Caterpillar was little changed. In other news, Trump said he wants a payroll tax cut. Mall owner Simon Property to reopen 49 sites starting in May, and 3M said they're returning to growth in China. Wrapping things up, some of the names pointing after the bell tonight include Google and Starbucks. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, I thank you very much, Bill Maloney. And to hear live breaking news on your Bloomberg, type squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
Yeah, how about you let me drive?
Oh, no. Who's gonna drive home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
It is time for the drive to the close. Just got about 15 minutes left in today's trading day. Carol Master along with Jason Kelly. Back with us is Alan Zaffron. He is founding partner and co-CEO at IEQ Capital, joining us on the phone from Foster City, California. Alan, good to have you here with us. How's it all going?
Well, I tell you what, it's beautiful weather out here, home sheltering. To mirror London breed in San Francisco, and you're in the 6 counties surrounding San Francisco, you're sheltering at least through the end of May. So California has a tighter lockdown possibly than other parts of the country, and we'll see in the long run whether that was prudent or not, both as well as an economic perspective. But the rules are the rules, and that's the way we are in California, in Northern California currently.
And so what do you make of it? I mean, as a longtime businessman, someone who's watching both the markets, but obviously has watched the rise of Silicon Valley and just the economic boom that you've seen there in Northern California. Obviously, it's a balance, Alan, but I wonder what you make of it.
I make of it, it's fraught with challenges. Clearly, it's a negative economically. Clearly, it's a positive from a healthcare perspective. The reality is we probably were not built to handle a massive amount of emergency cases heading into hospitals. We would have been overwhelmed. It's easier to look in retrospect and think we should have acted sooner. We didn't. Yeah. In the absence of doing that, we had to take some action steps. The question will obviously be, was the cure worse than the disease? Not entirely sure. It's very clear that there's been significant economic damage that's going to last years, not weeks, not months, years. And so that's the sad part of this is you're going to see a tremendous amount of economic damage. And the worst part of this, right, Jason and Carol, the inequity between the wealthy and those that don't have has only been exacerbated by this crisis. All right,
hold that thought for a second, Alan. We need to get back to the White House now because the Treasury Secretary, Steven Mnuchin, is speaking. Let's go there.
$1 will have a full review for forgiveness before they're repaid, because this is the story of small business here. And I am so pleased to see how this is working. So thank you, Mr. President. I'd also just like to comment, we're going to be up to close to 120 million of direct deposits in checks for the economic impact payments. If you have not received it yet, please go to irs.gov. Get my payment. We made some corrections to the website over the weekend. Please go on and check your payment. If you haven't received your payment, upload your information so we can get you the money. The combination of the direct payments, the PPP, the disaster loans, and enhanced unemployment insurance is the investment that the president has made in American business and American workers. Thank you, Mr. President.
Thank you very much, Steve. Very much. And on the enhanced...
All right, you've been listening there briefly to Treasury Secretary Steven Mnuchin giving comments as part of an event there in the East Room, the president hosting. We heard earlier from the president, his daughter and advisor Ivanka Trump, and then from Secretary Mnuchin. Look, Mnuchin, as we know, has been really the quarterback of this entire program when it comes to the fiscal side of the response, the chief negotiator with Capitol Hill, with the Democrats, in part because the relationship between, especially the Speaker of the House and the President, is so fractured that they can't negotiate directly.
Right, getting stuff done with Chuck Schumer and Nancy Pelosi. Let's get back to Alan Zafran, founding partner, co-CEO over at IEQ Capital, on the phone from Foster City, California. Alan, what do you think so far of? We could debate a lot about how long it took, and whether the shutdown will hurt us more in the long term. There's lots to be said, lots of criticism about what we did wrong, and there are things certainly that folks have done right. But I do wonder about the aid that's coming, because that's really important, and that's the kind of forward-looking story about how we get through this and how do we look on the other side of the virus. So far, so good?
So far, so good. But if you think of it this way, aid can only do so much. It's almost like there's four things that have to get done, because you really have a medical crisis. So you can lower rates to zero like the Fed did, and that helps. That doesn't solve a virus problem. You can have the federal government throw money to individuals who are unemployed. That doesn't stop a virus problem. So ultimately, it's helpful, fills the hole from some of the unemployment gaps and lack of economic activity when 54% of small businesses are shut down in America. But the reality is, until we get a solution for the problem, you're still going to end up in a world of volatility and uncertainty. And until someone has a clear-cut vaccine with it being widely distributable, it's a fool's errand to think that the volatility has suddenly gone away. Don't be fooled by the last week. We're not out of the water yet. It's still going to be tough.
Right, and that's clearly true, Alan, for anyone who's looking at this with a clear eye. And yet, I take a look at actually, I want to bring you one headline related to your state. California reporting 1,576 new COVID cases, 54 deaths in the last 24 hours. I believe that's a tick up maybe from yesterday. So we'll bring you more details on that. That, of course, coming from California Governor Gavin Newsom. He's giving his daily update over the last hour or so. What I was going to say, Alan, is in terms of valuations, and we've been talking about this over the last couple of days, especially because it's such a big tech week. You've got the NASDAQ that I'm looking at my Bloomberg terminal right now is down less than 4% for the entire year. So things aren't necessarily cheap right now.
Yeah, you've hit the nail on the head. I can't tell you how many questions the last week I've had about, I can't believe how come this market's going up. The indexes are hiding the weakness. The NASDAQ is reasonably flat for the year. The S&P is down, like 10% for the year, but small caps are down 25%.
Yeah.
It's because defense is what used to be high beta. It's no longer beta. Large cap growth, businesses that aren't as reliant on basic economic activity. You don't need people visiting you. They're low contact sports, so to speak. Those are the businesses that have been working in this economy and probably will continue to in a low growth environment. And so the S&P 500 and the NASDAQ are, in a way, hiding the broader Main Street economic weakness, and that is where the money is rotating. And until there's greater semblance of a reflationary economy, which could be several years away, large cap, U.S.-centric large cap growth seems to be the place where there's more steady growth, and all things equal, ironically, it's a safer place to put your equity capital.
Right, and the companies that we can probably bank on to get through all of this, ultimately on the other side of it. Would you suggest, Alan, that still it's a time to kind of pick up some names, certainly in the equity universe? There are some opportunities out there, or do you feel like those easy gains, the bounces off the low, that's already been done?
Yeah, I think the train's left the station on the easy gains. It always makes sense if you're a long-term investor to be dollar cost averaging. However, it's a world of low growth. You want to stick with franchises, strong balance sheets, and the ability to grow earnings regardless of a very slow economic environment. So don't get caught in a value trap. Just because there's a high dividend doesn't mean it's going to stay at a high dividend, nor does it mean that business is going to be able to generate the cash flows to pay that dividend. Focus on quality right now. Make sure you know the franchises and sectors you're buying into. There's a reason healthcare and tech are the best performing sectors here, because that's where the secular growth is now and going forward.
I feel like I was just going to say, I feel like that's going to be our new world order.
Healthcare and tech?
Yeah.
Yeah, secular growth. So, Alan, talk to us about real estate. I feel like this is going to be one of the big questions that we are talking about for some time to come, not just from an investment perspective, but from the perspective of how do we consume real estate? How do we use it both residentially and commercially? We had Kent Swig on our program last week. He obviously has invested heavily, especially on the coast in San Francisco near you and in New York City here near us. We also have these big questions around, are big companies going to take less real estate, more real estate? What does social distancing look like? What does the new workplace look like? And I do wonder, especially given your history of advising a number of wealthy families over the years, real estate has always been a pretty comfortable place for folks, right?
Yeah, it really has, because it's got very tax efficient mechanism to deliver income, and I think it's very clear. There have been some secular changes, and the secular changes are, first and foremost, there is going to be a shift in work behavior going forward. It's clear not everybody's going to jump back to the office as frequently. On the one hand, I kind of like that because there'll be less traffic driving to and from the office. On the other hand, if I'm an owner of an office building, I think my buyers now, my renters, are going to have more buying power. I think there's going to be less demand for office, so there's definitely going to be some valuation discount probably, other than an exceptionally high-quality office in major metropolitan cities. Secondarily, I would argue that industrial properties, core industrial properties, have actually gone up in value. The notion of delivering more goods and services to more consumers going forward, if you're a warehouse provider for a Target, Walmart, Amazon, it's going to be a good thing. So there's winners and losers. I think the place that's really complicated, not retail, it's pretty clear that it's an over-retailed environment. It'll have to refigure it out, but it's apartments, which has traditionally been a very safe environment. If we're in a world where renters are given a free pass to pay rent, possibly for very good reason, I don't know if that makes the landlords feel very good, and I don't know who's culpable on the back end. And so there is going to be, at least in the short run, some discount to valuations on basic conventional apartment buildings, because what was once perceived to be an exceptionally low-risk income stream, is arguably a little more risk. It depends on what kind of apartment property and what location.
All right, we're going to leave it there. Great to catch up with you. Thanks for being patient with us as we jumped around. We really appreciate it. Alan Zaffron, founding partner, co-CEO of IEQ Capital, on the phone from Northern California. Coming up, the close of trading stocks. They've dipped back down. We'll get you all the numbers and some earnings coming up. This is Bloomberg.
Bloomberg Daybreak Asia.
This is an important message from the government. For now, we must all still stay at home. It can be hard, but it's making a difference. So please keep going for the ones you love. Keep going for every key worker on the front line as they keep going for us. Keep going because together we will beat the virus. To all of you making sacrifices every day, thank you. Stay home, protect the NHS, save lives.
Get your daily dose of NFL shop talk with these great podcasts on TuneIn. Start your morning off right with Around the NFL.
Injured, depleted roster into the playoffs, and I didn't think they belonged in the playoffs.
I think overall, though, it was a great divisional round weekend because you got the first one.
Run into the end zone with the Move the Sticks podcast.
We had a fun little Zoom cocktail hour last night.
Oh, yeah.
What a star-studded affair. Greg, you were there for the earlier part, but it really popped off a little later on. We had Zach Goldman.
And dive deep into the sidelines with the Peter King podcast.
On the occasion of his 50th birthday, come down and record a little bit of retrospective on the life and times of Brett Lorenzo Favre.
That sounds like a bestseller.
It sounds like a precursor to a funeral. That's what it is.
I wasn't thinking that.
Explore these and more hard-hitting NFL podcasts right here on TuneIn.
This week on the New Yorker Radio Hour, our writers fan out to report from across the city at the height of the coronavirus outbreak in New York.
I won't say it's business as usual, but, we still have responsibilities and we are handling everything. But, I'm not going to let COVID beat me.
That's the New Yorker Radio Hour from WNYC Studios. Listen to this episode on TuneIn today.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Get your MLB fix with these great podcasts on TuneIn. Fill your seventh inning stretch with the Ringer MLB Show.
I just can't get over it. It's like, Jeter Downs. Didn't realize he was a top. Like, my dad is drinking the Kool-Aid on this. He's like, of course. Mookie was going to leave. I'm like, what do you mean? You don't know that.
Slide into second with the Starting Nine podcast.
Nolan Arenado slides right into the top spot for favorite baseball player. Active in the league right now. It is a pleasure to be sitting next to you, sir.
Thank you, man. I appreciate it. Thank you.
This is we've been waiting a long time for this. We actually, in terms of active
round the bases with the Statcast podcast.
Ways of going about it. I picked third, so in some ways it made it easier for me. Mike just to go over the first couple of picks. Mike took Barry Bonds, who I think was kind of the obvious guy to take number one. Not only
catch these and more MLB podcasts right here on TuneIn. Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. There you have it, sound of the closing bell at the New York Stock Exchange as we wrap up trading on this Tuesday, April 28th. Robert Glorioso, Chief of Building Engineering Operations, all alone, ringing that closing bell at the New York Stock Exchange as we await the latest numbers out of Ford, Alphabet, Starbucks, and AMD. Turned out to be a down day. A lot of the selling really coming in the final few minutes of trading. In fact, session lows, S&P down 15 points, a drop of 0.5%. The Dow dropped 33 points, down 0.1%. NASDAQ slumped 122 points at the close, down by 1.4%. 10-year up 18.30 seconds with a yield of 0.60% today. Gold down 0.3, 17.09 the ounce. Crude all over the map today, down 0.7 right now. West Texas Intermediate tumbling again, now at $12.70 a barrel. So the biggest U.S. tech shares slump weighing on major equity gauges as consumer confidence crashed and more companies withdrew earnings guidance. As for the overall market backdrop, Russ Kosterich's portfolio manager at BlackRock.
The market has moved quite a bit, and I think that bounce off the bottom we saw in March was justified. At that point, we didn't know what the policy response was. People were still justifiably afraid of a worst-case scenario, which thankfully looks like we're going to avoid.
More carnage in the travel industry. TripAdvisor cutting about a quarter of its workforce in a bid to shrink costs as the global coronavirus pandemic decimates travel. We've got TripAdvisor based in Needham, Massachusetts. Its shares up today, though, by 2.1%. Among some of the airline names today, we did see shares of Southwest up 2.1%, and some of the other airline stocks today also moved higher. Delta among them on the advancing stocks. The Dow, the S&P, and NASDAQ all lower late day selling. S&P down 0.5%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Wild thing, think you move me.
I got a few moves I know you'll like. Oh, come on, shake him, not stir.
Just move on toward your destination.
I can make things move without touching them.
Shaking all over.
Bloomberg Business Week, Movers and Shakers with Carol Masser and Jason Kelly on Bloomberg Radio.
Yes, indeed. It's time to take a look at some of the movers and shakers on this Tuesday afternoon. Carol Masser along with Jason Kelly watching out for some earnings. It's a big week for tech earnings, and of course Google, parent Alphabet, should be crossing any moment. Oh, is it? Okay.
It is out, yeah. Alphabet first quarter operating margin 19% versus 18% year over year. First quarter EPS $9.87. That's versus $9.50 year over year. I'm looking for comparisons here, or not comparisons, but rather comparisons to estimates. Not seeing anything cross the Bloomberg yet. We will obviously be bringing you those as they come across. Let's just take a look at what
stock is up more than 4% in the after hours,
yeah,
Jason.
So
at least initial read is investors kind of liking what they got from Google. This will be a big one in terms of what kind of activity we're seeing through the virus, how they are seeing it, and what it looks like. First quarter Alphabet, first quarter revenue ex-TAC. This is key. $33.71 billion. That's up 14% year over year. So again, the CFO saying they're sharpening their focus on executing more efficiently. That sounds like CFO speak.
Yeah.
Forgive me. So we'll look for some analysis.
Clearly that CFO went to good CFO school. I believe that's Ruth Porritt, right? She knows her cues from Wall Street. That's for sure, her Wall Street days.
All right. So let's do a little bit of a big picture as we watch for some more headlines here. S&P 500, 333 names in the S&P higher today, 171 lower, 1 unchanged. A little bit of a mixed bag because, as Charlie mentioned, those major equity averages taking a leg down in the last half hour or so of trading. So we did pretty much finish at our lows of the day. So not all of the major industry groups in the S&P 500 were higher today, kind of almost split down the middle. At the top of the pack, let me just pull up my list, if I may. At the top of the pack, energy, materials, industrials, financials, consumer staples, they all gained on the day. Energy, though, 2.2% higher, but of course coming from still a very low base. Bottom of the pack, healthcare names down about 2%, but I think they've also been on a bit of a run here, certainly, as we've been talking so much about the virus.
Yeah, and just to maybe reiterate something you said, so that first quarter revenue number, the ex-TAC, $33.71 billion, that is a beat. $32.6 billion had been the estimate there. So, and the CEO saying, Sundar Pichai saying, people relying on Google services more than ever. And if you're any indication of that, you're often talking about what Google tells you, your Google Home tells you in terms of headlines in the morning.
I have long conversations with Google Home.
I hope no one ever gets those recordings.
What's interesting, too, is Alphabet, Google saying also that it's a significant ad revenue slowdown in March. That's no surprising. The ad market has been turned upside down because a lot of brands and companies don't want to be advertising towards this, although I have certainly seen a shift on air about companies coming out. It's very much more about brand and imaging, about what they are doing to help employees, to help customers during this tough time.
Well, and this is something that we're going to be obviously talking to Taylor Riggs about in just a few minutes. I mean, part of the question is the ad market versus just the consumption of something like YouTube. You know, it's massive in a time like this. Although then there's the mobile question, you know, versus at home. Starbucks numbers, those are also out. Second quarter adjusted EPS 32 cents versus 79 cents quarter over quarter. Second quarter comp sales down 10%. Versus plus 5% quarter over quarter. So a 15% swing quarter over quarter in terms of comp sales. I mean, that makes sense too, right?
Yeah. Stock is little change here in the after hours because this is a company we expect to be hurt big time. And I will say, I feel like Starbucks has become a metric for figuring out when do things start to get back to normal. We've been watching what's happened in China as they reopen, and they have been. And so I feel like that's going to be also a metric for us. Stock now down about 0.8% in the after hours.
All right. And I believe the CEO, Kevin Johnson, will be joining David Weston tomorrow. So we'll look forward to hearing more from Starbucks. Let's take a quick look at volatility. The VIX up a little bit today, about 1.6%, closing at 33.81. This is Bloomberg.
All right, Dave, you're up.
Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for a price on Wilson.
Open up the door, it's Dave! Who? Dave!
Hey, Mr. Wilson. Dave Wilson back with us with his stock of the day. What you got?
I've got Harmonic, Jason. It's a company that provides equipment and software that allows cable companies to provide streaming video and internet access over their lines. The company was founded in 1988 and went public in 1995. The ticker is HLIT. Harmonic surged in the late 1990s as the bull market in U.S. stocks ended and plummeted in the bear market that followed. Now, the shares have languished at lower prices ever since, though they've been up and down over the years. This year has been a down one for Harmonic. Through mid-March, the shares dropped as much as 43%. While they rebounded from there, first quarter results that came out late yesterday interrupted the recovery. Harmonic's earnings trailed the average analyst estimate in the Bloomberg survey for the first time in 9 quarters. Revenue unexpectedly fell. The company forecast a second quarter loss and a steeper decline in sales while withdrawing full-year forecasts because of the coronavirus. The results and outlook sent Harmonic shares to their biggest loss since November 2016. They fell about 14%.
Well, yeah. Good to hear that, David. Forgive me, I just want to get to some headlines too. Ford out with their latest results, and I feel like that stock's been bouncing around. It's down about 2% here in the afters. It looks like a trade to the upside, but right now down almost 2%. But what's interesting is they came out and said, again, Jason, to be expected, environment too ambiguous to provide year 2020 guidance. Sees a second quarter adjusted EBITDA loss, or EBIT loss, of over $5 billion. That's a big one. Their first quarter, a little bit light on the revenue number, but it's about the outlook. And so this is a stock that's already down more than 40% this year. But again, you're seeing some selling in the after hours.
Yeah, people aren't rushing out to buy cars. And also there's a question of when do those production lines reopen fully? That's been delayed, I know, at least in Michigan. So more to come on that, more on Google, Alphabet as well coming up. First, San Francisco. We're going to go there to Ed Baxter. He's got world and national headlines. Hey, Ed.
Hi, Jason. Hey, President Donald Trump says a new infusion of small business funding has begun.
Demand is extraordinarily high, and there are already twice as many users accessing the system as on any day under the first round.
He also says he will sign an executive order to keep meatpacking plants up and running.
As you know, there's plenty of supply. It's distribution, and we will probably have that today solved. It was a very unique circumstance.
Yeah, he says liability issues can be solved. He also says regards funding to states, the issue of sanctuary will be considered, bringing the immigration issue into coronavirus equation. California Governor Gavin Newsom has begun laying out the careful preparation for reopening. He says not now, but sector by sector. So the reopen could begin, he says, in weeks rather than months.
We'll be meeting today in the retail sector with some of the biggest retailers, some of the well-known brands like the Gap CEO will join us, but with small businesses, small retail.
And he also said, parents, the school year could begin again in July or August rather than September. Regarding numbers, cases down, hospitalizations up, deaths up day to day. New York, Governor Cuomo.
Every day, I think maybe today is the day the nightmare will be over, but it's not. 335 people passed away yesterday from this virus in this state.
He says numbers have stabilized, even a decline in hospitalizations, but not enough for reopening. He also laying out the groundwork to be able to open when ready, as California's Gavin Newsom is doing as well. In San Francisco, I'm Ed Baxter. This is Bloomberg.
There are times when you have to go it alone, but these should not be those times.
With a medical crisis, can any other central bank execute?
Bloomberg Surveillance with Tom Keene and Jonathan Farrell.
Walk me through the dynamics that are going to shape the euro in the coming months.
Weekday mornings at 7 Eastern.
Do we have the ability to coordinate with this virus?
On Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com.
When things move this quick, do things break?
Bloomberg, the world is listening.
Melissa from Michigan. I work an extra part-time job serving lunch at my child's school, but I still can't afford to put food on our table.
Daniel from California. Choosing whether to pay the rent or pay to fix the car to get to work doesn't leave us with much at all. Now we can't even pay for meals.
Hunger is a story we can end. End it at feedingamerica.org. Brought to you by Feeding America and the Ad Council.
The world's financial decision makers connect on the Bloomberg terminal. The buy side and the sell side together, collaborating across markets and countries in real time, sharing ideas, negotiating trades, and forming an influential network of over 325,000 financial professionals that helps power global markets. Isn't it time you join them? Request a demo at Bloomberg.com/professional.
There are everyday actions to help prevent the spread of respiratory diseases. Wash your hands. Avoid close contact with people who are sick. Avoid touching your eyes, nose, and mouth. Stay home when you are sick. Cover your cough or sneeze. Clean and disinfect frequently touched objects with household cleaning spray. For more information, visit cdc.gov/COVID-19. This message brought to you by the National Association of Broadcasters and this station.
Are you interested in...
Okay, people, I've got the daily checklist. Who today has eaten dinner for breakfast? Tick. Started a chore you'll never finish? Tick. Done a conference call in your pajamas? Tick. Here's another for your list. BritBox. Streaming the BBC, ITV, Channel 5, and now Channel 4. All in one place and ad-free. So add BritBox to your list and get a 30-day free trial of the biggest box of British box sets. Search BritBox free trial. Tick. Biggest compared to other SVOD providers. Auto renews at $5.99 a month unless cancelled. T's and C's apply.
Typical Danny. Imagine trying to unwind at a spa weekend and you wind up getting your mud pack all over your fave personalised dressing gown. But no worries. Just one wash and my clothes will smell perf with Surf. Surf gives you long-lasting fragrance with natural essential oils. Find your fragrance in Surf's laundry range.
This is an important message from the government. For now, we must all still stay at home. It can be hard, but it's making a difference. So please keep going for the ones you love. Keep going for every key worker on the front line as they keep going for us. Keep going because together we will beat the virus. To all of you making sacrifices every day, thank you. Stay home, protect the NHS, save lives.
Thank you.
Thank you.
Thank you.
Thank you.
Thank you. Thanks to National Lottery players, communities across the country are about to benefit from up to £300 million of funding. Thank you.
Thank you.
Money that will help support the most vulnerable in these exceptional times.
Thank you.
Thank you. Food banks, local health organisations, charities combating loneliness, and thousands of other community causes will all get vital resources.
Thank you.
Thank you.
And it's all thanks to you, playing the National Lottery. Your numbers make amazing happen.
Max is dreaming of riding a giant chameleon whilst fighting a clan of ninjas. But in reality, he's helping fight COVID-19 in his sleep. Like thousands of others, he's joined the Dream Team. By using the Dream Lab app, they're helping scientists speed up the search for potential treatments.
I'll fight you.
You go, Max. Search Vodafone Dream Lab and join the Dream Team tonight.
DreamLab app is owned by Vodafone Foundation, an independent charity. Registration number 1089625. Full terms at vodafone.co.uk/dreamlab.
Hit the court anytime with these great NBA podcasts on TuneIn. The Low Post.
So what struck you about this potential head-to-head matchup? What did we learn now that Zion is involved and LeBron and Zion go at each other for the first time?
You know, I still think both teams have to figure out kind of who are their guys when they get into a fourth quarter. I think you saw that with both of them. There were some kind of odd moments.
The Ringer NBA Show.
Who ended up winning the thing. But I did watch for a little bit when it was DeAndre Ayton and Zach LaVine playing against each other. And then as the days went on, Devin Booker was involved. Tell me you've seen the clip of Devin Booker when I can't remember who his opponent was.
Or the Haber Show.
At the end, it's because I worked in the NBA in the front office, and when I was 14 years old, my family moved back from Sudan to America. I jumped high school here in New York
Find these
City.
and more NBA podcasts right here on TuneIn. 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks snap a two-day winning streak with the Dow, the S&P, NASDAQ, all declining. A lot of the losses coming in the final few minutes of trading. S&P ending the day down 15 points, drop of 0.5%. The Dow down 32, lower by 0.1%. NASDAQ down 122 points, a drop there of 1.4%. NASDAQ pulled down by Facebook, Amazon, and Netflix as data showed U.S. consumer confidence dropped in April to the lowest since 2014. Most stocks in the S&P 500 index rose amid gains for casino operators, cruise lines, and other coronavirus-sensitive shares. Again, the Dow down 32 points, down 0.1%. 10-year up 16/30 seconds with a yield of 0.60%. Gold down 0.3%, 17.08 the ounce. West Texas Intermediate crude lower today by 0.7% at $12.69 a barrel. After the bell, we did hear from Google. Earnings came in better than expected. Shares up by 3.8%. We will have more on the Google story for you coming up right here on Bloomberg Business Week. Recapping, down Tuesday. S&P dropped 15, lower by 0.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Well, Carol, we haven't been in our studio in a number of weeks, and clearly we left the door open because someone wandered in. Good news for us. She's one of our favorite people on the planet. Taylor Riggs in our Bloomberg Interactive Brokers studio looking at Alphabet after the close. First of all, Tay, how are you?
You know, I'm still in the office and things seem to be relatively okay here. The few of us that are still coming in, we're doing a good job trying to make sure that we're keeping you updated on all of the earnings and the movers. So it's great to be here holding down the fort.
We appreciate it. You're doing some important work there on the front lines. I thought you were going to say, you're there working and everything's going smoothly. So, what do you need us for? Which
so
is
much
fair.
For job security for you, Jason.
Exactly. That's very fair. So this is a little bit of a throwback for you, going back to your tech roots. You were the host of the Bloomberg Tech Show for quite some time, late last year, early into this year. Obviously, a different time from where we are now. What does Alphabet tell us about the state of the world?
The big focus for Google and then therefore Alphabet was going to be the ad revenue. And I think the frustration or, perhaps some of the concern around this earnings is you're getting guidance into the first quarter, but frankly, that's very outdated. We really need guidance into the second quarter. So on the first quarter ad revenue growth, look, you got a gain that was better than expected. 14% gain year over year, ad revenue coming in at $34 billion. But I want to remind viewers, this is the first quarterly revenue drop ever for this massive search engine, which has been behemoth and pulling in all of these ad revenue dollars. Still, though, I guess it is better than what some people thought. I was speaking with Rohit Kulkarni over at MKM Partners, and he thought that ad revenue growth in the first quarter may only rise by about 4%. I think the problem is the companies come out and said that they saw a significant slowdown in March, but we really need insight into April because that is when everything fell apart. And so, of course, as we wait to hear from the analyst call, how deep is the drop in April? How quickly can it rebound? Some analysts are looking at a 10% drop in second quarter revenue, which, of course, the company gets 82% of its revenue from ads. So that is going to be big in terms of how fast it started in March and really how quickly it continued in April.
It's interesting because I'm looking at the stock. It's been bouncing around, but it's up more than 3% here in the after hours. We have to remember that when I feel like this harkens back to Taylor, we had a conversation, Jason and I, with Alan Zafran, just talking about the markets. And, he sees the long plays, especially in this post-COVID-19 world, it's going to be technology and healthcare. And the bigger names like a Google, it's got, some $119 billion, $120 billion of cash, on the balance sheet. These are companies that have deep pockets so that even when it's a tough time, it won't look so great maybe for a couple of quarters, but they've got money to get them through, and they can think about what it looks like on the other side.
You are 100% right. And it was Mark Mahaney over at RBC Capital Markets earlier today who said that the long-term story of this company has not changed. Of course, you don't want to just dismiss the first quarter and the second quarter. Those will be tough numbers. But the long-term trajectory of this company is still very much intact. And everyone came in to 2020. I was in San Francisco in December of 2019. All the analysts had Google and Facebook, their top buy ratings for the year. And even though we are having a setback, the long-term story of these companies really does still remain intact. And you're hearing from companies like Alphabet, like a Google, who say that all this has done is made them resharpen their focus. They're looking at more efficiency. They are seeing that ad revenue slow down, but, people are relying on these services more and more. One of those services are the cloud. If we have a few minutes, we could speak about the cloud.
Go for it.
That's an area where the company's really seen a lot of growth.
Yeah, and we do have a minute.
This last quarter was the first time they broke out numbers for the cloud. They were notoriously a little bit secret. They didn't want to give out numbers around YouTube, around the cloud. They're smaller relative to AWS and Microsoft's Azure product. And yet they came out last quarter and disclosed it, and their cloud revenue growth is growing. They're up 6% on a quarterly basis. $2.8 billion. Last year, it was a $9 billion business, and that grew from just $4 billion 2 years ago. So the Google Cloud is an area where, as we are all working from home, there's a lot of runway for this company to make some room. They are the distant third in the cloud space, but hey, if people are using their service, cloud is a huge growth story for this company.
It's hard to bet against them, right?
Well, and the thing is, even if you're number 3, right, considering how much cloud usage is out there and it's just growing, I want to say exponentially, they're going to do okay.
Growing fast.
Right? They can get a nice little piece of that pie, and it can be a nice business for them.
I do, on a lighter note, want to hear about some of their other ventures. We know that the other part of Google are some of the money-losing companies like the autonomous car effort Waymo. It made less than 20% in sales last year, and it lost more than $1 billion. So very curious. We know that they have the ability to withstand this in the long term, but does in the short run it make them rethink the investments in some of the money-losing businesses?
All right. I love the idea that on a lighter note for Taylor Riggs is I'd like to explore different parts of their balance sheet and understand. I thought she was going to be like, on a lighter note, how are you doing? Or something like that.
Doing in your free time?
Right. On a lighter note, what's the gross margin on some of the forward-thinking banking businesses. All right, Taylor Riggs, CFA, you're the best.
I was going to say, you can't take the CFA out of the girl.
Cannot take the CFA out of Taylor Riggs, that's for sure. All right. Coming up, we're going to stay with the Silicon Valley theme. Max Levchin, CEO of Affirm and also the co-founder of PayPal. He's going to be along with us. A lot to talk to him about what he's seeing in his business, what's happening there in Silicon Valley. Stick with us. Carol Master, Jason Kelly, this is Bloomberg.
This is a Bloomberg Money Minute. Stocks snapped a 2-day winning streak. Big technology shares weighed on the market as consumer confidence slumped and more companies withdrew their earnings guidance. The Dow Jones Industrial Average fell 32, the S&P 500 lost 15, the Nasdaq Composite tumbled 122. Google will keep its employees working at home at least until June. Even then, CEO Sundar Pichai says any return will be staggered and incremental. He outlined the plans in an email, a copy of which was seen by Bloomberg. As malls reopen after the pandemic, at least one retailer will remain dark. Harry & David's will close 38 of its 39 stores. Its only remaining store will be near its Oregon headquarters. The coronavirus pandemic will be front and center in a new Netflix series from the creator of Orange is the New Black. Social Distance will feature actors filming themselves in their own homes. Production will start in a few weeks. Larry Kofsky, Bloomberg Radio.
1 in 3 adults has prediabetes. 1 in 3. That means it could be you, your football buddy, your football buddy, or you, your best man, your worst man, you, your dog walker, your cat jogger. While 1 in 3 adults has prediabetes, with early diagnosis, prediabetes can be reversed. Take the risk test at doihaveprediabetes.org. Brought to you by the Ad Council and its prediabetes awareness partners. In-depth analysis, concise reporting, need-to-know global business news. Around the world and across the markets, Bloomberg connects the dots for decision makers. Stay on top of today's headlines. Follow big breakthroughs in tech. Understand the latest political issues. See how the world's wealthiest are spending their money. Track what's happening in the markets, and much more. Subscribe today to Bloomberg, the global standard for business reporting. Get it all at Bloomberg.com/subscriptions.
If knowledge is...
Hit the court anytime with these great NBA podcasts on TuneIn. The Low Post.
So what struck you about this potential head-to-head matchup? What did we learn now that Zion is involved and LeBron and Zion go at each other for the first time?
You know, I still think both teams have to figure out kind of who are their guys when they get into a fourth quarter. I think you saw that with both of them. There were some kind of odd moments.
The Ringer NBA Show.
Who ended up winning the thing. But I did watch for a little bit when it was DeAndre Ayton and Zach LaVine playing against each other. And then as the days went on, Devin Booker was involved. Tell me you've seen the clip of Devin Booker when I can't remember who his opponent was.
Or the Haber Show.
At the end, it's because I worked in the NBA in a front office, and when I was 14 years old, my family moved back from Sudan to America. I went to high school here in New York
Find these and more NBA podcasts right here on TuneIn. Get your MLB fix with these great podcasts on TuneIn. Fill your 7th inning stretch with the Ringer MLB Show.
I just can't get over it. It's like, well, Jeter Downs didn't realize he was a top. Like my dad is drinking the Kool-Aid on this. He's like, of course, Mookie was going to leave. I'm like, what do you mean? You don't know that.
Slide into second with the Starting 9 podcast.
Nolan Arenado slides right into the top spot for a favorite baseball player. Active in the league right now. It is a pleasure to be sitting next to you, sir.
Thank you, man. I appreciate it. Thank you.
This is we've been waiting a long time for this. We actually, in terms of like active
Round the Bases with the Statcast podcast.
Ways of going about it. I picked third, so in some ways it made it easier for me. Mike, just to go over the first couple of picks. Mike took Barry Bonds, who I think was kind of the obvious guy to take number one. Not only
catch these and more MLB podcasts right here on TuneIn.
If you've used TuneIn much, you probably already know how to favorite your top stations and podcasts for quick access. But did you know you can organize your favorites too? Under your favorites page on the TuneIn app, hold and drag the stations to rearrange the order to your liking. It's that easy.
With the NHL season temporarily on ice, now is a good time to catch up on past games.
Bergeron, he scores!
With Game Replay on TuneIn, you can listen to every power play, slap shot, and goal of the 2019-2020 season so far.
Suter to Cunnin to Fiala. He scores!
And for a limited time, it's free for hockey fans everywhere. Search Classic Game Replays to start listening. This week on the New Yorker Radio Hour, our writers fan out to report from across the city at the height of the coronavirus outbreak in New York.
I won't say it's business as usual, but, we still have responsibilities and we are handling everything. But, I'm not going to let COVID beat me.
That's the New Yorker Radio Hour from WNYC Studios. Listen to this episode on TuneIn today.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, coming up, a conversation I've really been looking forward to. Max Levchin is going to be with us for the balance of the hour. Going to talk about Silicon Valley, what he's seeing. Affirm is a company that has a really interesting window into how people are and maybe aren't spending their money right now.
Yeah, exactly. And we'll start there probably. All right, let's get a check on your top business stories. Lots of news after the closing bell, Charlie Pellet.
Indeed. Want to begin very much on the West Coast. Uber's chief technology officer, Thuan Pham, is stepping down after Uber was hit hard by the coronavirus's impact on the travel industry as global transportation has ground to a virtual standstill. Also after the bell, we did hear from Alphabet, parent of Google. It reported first quarter revenue that rose more than expected, showing demand for advertising was high in the months before the coronavirus pandemic hit the online search giant's customers. Shares up now by about 3.5%. Turned out to be a down day on Wall Street. The Dow was positive for much of the day, but in the loss, a loss of 32 points, down 0.1%. If you were watching along on the Bloomberg using your GIP indicator, the Dow really sold off right into the close. S&P lower today by 0.5%. Nasdaq down 122, a drop of 1.4%. So Nasdaq snapping a two-day winning streak, pulled down by Facebook, Amazon, and Netflix as data showed consumer confidence dropped in April to the lowest since 2014. As for the market backdrop, Alan Zaffern is co-CEO at IEQ Capital. He was our guest right here on Bloomberg Business Week.
But the reality is, until we get a solution for the problem, you're still going to end up in a world of volatility and uncertainty. And until someone has a clear-cut vaccine with it being widely distributable, it's a fool's errand to think that the volatility has suddenly gone away. Don't be fooled by the last week. We're not out of the water yet. It's still going to be tough.
Lots of earnings today. Caterpillar, the world's biggest maker of mining and construction equipment, is predicting that the pain from the coronavirus crisis is far from over. Caterpillar shares up today by 0.2%. And the pandemic increased sales of Merck medicines during the first quarter as households around the world stocked up. But the drug maker expects a significant hit this quarter as the full force of the outbreak lands. Merck shares down today by 3.3%. 10-year yield 0.60%. Gold down 0.3%. 17.08 the ounce. West Texas Intermediate crude now up 2.4%, 13.10 a barrel. Recapping equities lower, S&P down 15, down 0.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So we've been looking forward to this conversation because when it comes to understanding the startup world, how online and tech are reinventing so much of what we do and how we do it, this next guest definitely comes to mind. Co-founder of PayPal, was CTO of the company, was chairman of Yelp for about 11 years from its founding days, was on Yahoo's board, founder and CEO of Slide, which was sold to Google. We're talking about Max Levchin, who today is founder and CEO of Affirm. He joins us on the phone from San Francisco. Max, delighted to have you here with us. First of all, tell us a little bit about how you're doing, your family, your employees. How's everything going?
Great to be with you. Thank you. I have to say, knocking on wood, we've been extremely lucky. Affirm transitioned to work from home seamlessly, almost perfectly, really, and we've been able to support our partners and our customers and our employees throughout this process, generally without too many crazy fire drills. So all in, I feel very lucky. I'm certainly aware of companies where all sorts of upheaval already took place, and I think some of this is just getting started too.
Well, and Max, it's interesting. I mean, it comes at a fascinating time for you where there's so much momentum around what you're doing at a firm, and you have this pretty incredible window into consumer spending. First of all, remind us exactly how a firm works, and then we'll get into sort of what you're seeing through some of that data.
Sure. A firm serves primarily a younger audience, as in our customers are primarily millennials and Gen Xers and so forth. And we're really a credit card alternative. You would find us if you're buying a Peloton or if you're shopping on Walmart.com, and really every merchant in between. We are there in the checkout page, sometimes on the product page, where if you don't want to use your credit card and would like to pay for an item or items over time with great degree of simplicity, everything is clearly priced. There are no fees of any kind. They're not even late fees. So it's a product that really was built on this idea that if we communicate very clearly to our customers what it takes to pay something over time, they would choose us over credit cards. And it worked. We've been at it for 8 years. At this point, we have many thousands of merchants that work with us and many millions of customers. We use billions of dollars of these transactions that we processed. And so we do see sort of demand in retail, primarily online, although we have a meaningful presence offline as well. And so you're right. We have some fascinating stats that we're observing.
Well, let's get into that. Tell us about, because Jason and I have talked about just kind of on our own world what we're spending money on right now. And earlier we talked about, that millennials in particular might stop with all the experiences and they're going to be spending on their home and other things because that's going to be the world we're living with, and you're not going to be able to travel easily. What are some of the data points that you guys are seeing about where people are spending their money right now?
So you pretty much nailed it, I have to say. I think the headline is exactly right. Millennials, and we're not just serving millennials, but many of our customers are sort of on the younger side, but everyone is sort of turned inwards. So if you are setting up your home office, your home gym, your home restaurant, or at least the kitchen part of your home restaurant, that is growing off the charts. So just to give you some stats, home office sales that we are processing is up 200%. Overall, sort of homewares, from mattresses to furniture to decoration, everything that you might want to have to make your home nicer is up about 20%, but there's some segments that are just incredibly high demand right now. So kitchen supplies, for example, are up 70%. Apparently, everyone has to bake and make their sourdough starters. And so, sure enough, there's lots and lots of things that you need for that, including bread makers, which is one of the top categories, apparently. Fitness, as you bake, you need to burn the calories too. So across the board, obviously Peloton is one of the publicly traded companies that's done extraordinarily well in that category. But Mirror and Tonal and all these other merchant partners of ours are all reporting huge growth. The overall category is up 163%, which is that's an incredible growth given how big it already is. I can sort of go on and on. The sort of the losers on the other side, or sort of the unfortunate ones, are also quite predictable. Clothing, no one needs to wear pants on Zoom, and so most people seem to be not shopping for fashion. There's a footnote. I'll come back to that in a second. But clothing is down. Travel is decimated. Really decimated in the sense that it's well than 90% down.
Wow. Well, hang on for a second, because this is fascinating. We've got to take a quick break, but we'll come back and continue the conversation with you, Max. And I just, full disclosure, I do wear pants when I'm on Zoom. I'm just going to tell everybody right now.
Yeah.
They might be yoga pants.
That's good to know. I'm not going to comment. I'm not going to weigh in on this, but we do know a lot of people out there probably aren't wearing pants, and that's cool. You do you. All right. Max Levchin, we're pretty sure he's wearing pants. He's on the phone with us in San Francisco. We're going to continue the conversation, talk a little bit about a firm, maybe talk about PayPal and some of the other things that he's worked on over the years, has had his hands in some of the most important companies in Silicon Valley and beyond. In the meantime, let's stay in San Francisco with Ed Baxter. He's going to bring us up to date on world and national headlines.
Well, I'll tell you, the weather's nice enough now that he probably wouldn't have to wear pants, but that's another story, I'm sure. President Donald Trump says he will sign an executive order keeping meat packing plants open.
We'll be in very good shape. We're working with Tyson, which is one of the big companies in that world, and we always work with the farmers. There's plenty of supply.
Yeah, he says distribution is a problem. And one meatpacking plant in Wisconsin, number of coronavirus cases makes up more than half of those in the county. And the president says a newly approved SBA stimulus has already been getting distributed.
We'd have to talk about things like payroll tax cuts. We'd have to talk about things like sanctuary cities, as an example. I think sanctuary cities is something that has to be brought up.
Yeah, that's funding for states down the road. So is